Hello, welcome. It is that of the 19th day, or the conclusion of the 19th day of July 2018. My name is Derek, and it's crypto day. Every day is such. And let's take a look at the Bitcoin chart. Like always, all your risks, your trades, your wagers is within your own risk, own reward. For myself, risk reward management is always job number one. And when this thing got going a few days ago, from the 18 average of lows, 18 average of lows that was flat, coming from a barely rising average when it had about a week where it was just staying above the 18 of highs. Two solid green up days that soared past the level of resistance of about 68, and it hasn't been anywhere close. In fact, it has been making the pattern or continuing higher highs and higher lows. For the high on the last green candle day was 74.68. It obviously made the higher low, but it got up to almost 7,600 with a low at 72.39. Today's session had a low of 72.78 or 72, yeah, 72.78, marginally higher, and then again higher, actually lower high. That was 57.90. So it was an inside day, but really for what's been going on, a lot of this sideways consolidation and digesting this gain. Look at this on a 60-minute time frame. This has been the story of Bitcoin for quite some time, with practically almost every single decent rise or fall, in that it's a long elevator ride up and then it's just going to go sideways within such. So it's creating all of the flag-like situation. It's been correcting within this range for quite some time now. And within such, basically when it's ready to go, it's probably going to have a decent size move towards the upside. And I think there's a decent chance that will be the next play. Now, granted, it could very easily come back. And if we do such, I'm still going to be waiting for this neckline or a previous level of resistance to be acted within the level of support, of course, within the 18 average as well. It's rising nicely, so prices are well above it, but it's nowhere near overextended when you have the shorter term sideways correctionary move. Now, using a search for ETF Bitcoin, because that's been the news that an ETF is looking to be added amongst the Bitcoin. So if I load up this page, which I've already read once, op-ed, why Bitcoin ETF approval could catalyze the biggest bull run yet. And what's written in here makes a lot of sense when you look at historical mathematics of where markets should go. Not what a 20% move, but based on its volatility being low or high, how it should go. And this, of course, a high volatile market. But reading such, the current Bitcoin electronic traded fund proposal awaiting the Securities Exchange Commission has captured a significant amount of attention within the cryptocurrency ecosystem, with investors and traders eagerly anticipating a mid-August decision that could decide the fate of the 2018 crypto market. Should the approval for the Bitcoin ETF succeed, the cryptocurrency market could potentially experience a never-before-seen influx of capital as institutional capital, speed traders, and accredited investors move into the crypto space for the first time. Well, some of them for the first time. Some of them are already in it already. Especially because if you know how to do it in your own time, you can do it. Anyway, the Bitcoin ETF proposal submitted as notice of filing of proposed rule change to list and trade shares of SolidX Bitcoin shares issued by this company's SolidX Bitcoin Trust on June the 26th is currently under consideration by the SEC. A decision from them regarding the filing is likely to occur near August the 16th. The submission of filing to the SEC is followed by the publishing of a notice to the Federal Register, which occurred on July the 2nd. The SEC typically has 45 days to make a ruling on a proposed rule change, which would leave the final date for decision on the BTF as halfway through August. As the 45-day period can be extended or even followed by the initiation of proceedings by the SEC to seek assistance in making a decision, An August 16th date for approval or denial is not definite. The company CEO commented on the proposal in an interview with Bloomberg, expressing optimism regarding the ruling. We believe that collectively we build something that may be better than other constructs currently making their way through the regulatory process. Properly constructed, physically backed Bitcoin ETF will be designed to provide exposure to the price of Bitcoin. An insurance component will help protect shareholders against the operational risks of sourcing and holding Bitcoin. And in here it says that the proposal would in bulk back the ETF. So basically a lot of this buying going on with Bitcoin just might be that. The question is, how much have they even bought if they're going to do the ETF? After all, you might need to have major approval to really get the buying on it going. But as far as the next quote here, and I want to read the bottom one too. The trust intends to achieve this objective by investing substantially all of its assets in Bitcoin, trading primarily in the OTC, over-the-counter markets. Through the trust may also invest in Bitcoin traded on domestic and international Bitcoin exchanges, depending on liquidity and otherwise at the trust's discretion. Notably, the availability of a Bitcoin ETF within the U.S. would make simple, streamlined Bitcoin purchases available to institutional investors, less technically adept investors. As I'm stating, the more technically advanced was already in it, and speed traders. They've already talked about that. But as far as the prediction of $50,000 price within the approval subsequent, which is pretty much right thereafter, not too much time more then. An increase in the overall demand for Bitcoin is highly likely to exert a strong positive influence of the price of Bitcoin. Co-founder and CEO of BitMEX, Arthur Hayes, recently predicted a massive rise in Bitcoin value should the SEC approve the proposed, stating that an ETF would bring real money to table in the interview with CNBC's Fast Money. I think something that goes up $20,000 in 1 year, well, 19,100, but close enough, from 1,000, of course. So $900, I think it was a low at, to 20,000. But it can have a correction down to 6,000 and will definitely find a bottom at about 3,000 and 5,000 range. Now, it's interesting they use that number, almost like the 3,000 number has gotten mainstream, or they know how to calculate, or it's just the obvious number and becomes a self-fulfilling prophecy. Many indicators show such. But like I've been stating, I'm not scared of any type of price correction down if such an event happens. But but basically what they're trying to say is that it's normal for a market to have the move that it did to 20,000 to go down to 3,000. I think that's what they're really trying to point out. So you're going to have all these naysayers, all these people who are morally and ethically opposed to that of Bitcoin, saying, oh, it's down 2/3, 60, 70, whatever percent. And like I state, you cannot go based on a big move based on how much percentage up or how much percentage down, because of its nature's volatility that it has. And of course, in crypto space, it is very large. We're one positive regulatory decision away, maybe an ETF approved by the SEC to climb through 20,000 to even 50,000 by the end of the year. So that is the article there, and this was 29 minutes ago, but probably closer to 45 minutes ago now. Will Bitcoin skyrocket as gold did in 2013 after the ETF approval? Really? Okay, gold has exceeded many challenges over the last centuries. I haven't read this yet, but gold. They're talking about the 1970s. So the golden run-up and the silver one, that was an incredible one. They're basically going on the ETF that, yes, it could surge the price higher. And of course, there's multiple reasons why that's the case. The actual realization that you have to buy the Bitcoin for the ETF. And as we move back to the charts, then you get more mainstream attention upon such. And then that's going to create more people who are going to be interested in playing within the Bitcoin movement. This market has had a very, very long-standing sideways correction. Obviously, it's been greater than 1/2 of a year. In fact, I don't do much trendline analysis. That's something I don't do too much. But what kind of... That one looks like it's actually hitting. Well, my whole purpose was to do... This is why I don't do much on here, because it seems that when I put one in, I got my line, and so I'll move my mouse and then it'll just move. See, it's so annoying with some things on the site. But anyway, this trend line on a log scale that connects at least these two highs as resistance and this one as support is now supporting again. But what I was trying to find was a trend line with a greater rate of ascent. I wasn't looking for one that was I mean, the only other one really is that one. I guess you could go this, because that was a Pierce Extra. And right now, this trend line's in at 47,000. So this is most certainly a trend line that could come into place later on as a possible area for major resistance. When you consider just at 1109, this is at 117,000. It's just resuming the trend that it had from June into August last year and into November before it had its final 6 or so week price explosion for its final leg higher. So that's the type of thing that I was trying to look for in here. But the whole point of me saying this again is, I've said this so many times within the crypto space. When the cryptos are ready to go, they just go. And again, the point of me saying this long correction, you could very easily see rates of ascent that we haven't seen for a while, even given the fact we had this one last year. And in fact, now that I look at this, I'm going to just draw in another trend line. Or rates of ascent that it had in the earlier days when it was like $50 and $100. But I mean, I guess this would be one rate of ascent that is just unsustainable, I would think, to hit, given that right now this trend line is at like 850,000. So that's the whole point of it, is a move that could play like this, that could easily turn this into like 60,000 in a matter of no time. In a matter of no time could be several weeks, like 4, 5, 6, 7, 8, 9. Low scale to higher scale. Those are definite possibilities, because you're playing a game that has historically had an extreme amount of volatility. As we can see on this breakout here, that's what I say in the earlier days. This is a spot where on January the 7th, or the start of 2013, it was $15. It was $15, or even for that matter, $13. And notice every single one of these green candles that went into April 7th, from January, 3 months of a move going from 13 to over 200. That's greater than a 12-15x gain. And when we look at things today, I look at spots like, one, what are the other coins doing as far as its gains? How many of them do very well, Gigabyte, and have the extreme movements? Of course, there are a lot of them that have. And they walk in, oh, here's a 40x, 80x type of a gain. So the way I look at it, if markets are completely capable of having 60, 80, 100x gain, and Bitcoin's going to follow with lower volatility, well, having quick 10, 12, 15x moves, and I'll define quick again, is substantially less than a year and probably even closer to it, maybe a season or two, even less than a season, which is that of 3 months. I could very easily do such within the crypto space. And like I've been stating for so long, that 3,000 game, that 3,000 number on a technical analysis, forgetting and not caring about anything about fundamentals on this point of view, states that we've been making lower highs. And this rally has still got, not only has it not proved itself by anywhere nears that it's the end of such, it's also not even close. It's just barely gotten above the 18. The 18 is only starting to flatten out and barely start to rise, and it's got to get above this high. But of course, the long-term fundamentals, like we stated, okay, so if it goes to 3,000, that's not going to change anything as far as where it's going to end up moving towards, which is basically the philosophy that I'm looking at it anyway. Furthermore, when we look at a situation about the banking system, I've gone over this over and over and over again, and this is an old topic that is very important, and that is how the fiat currency is created, how the banking system works, how the central banks work, how the lending system works amongst regular banks and everything. And when you understand it, at least the way I understand it, I see it as the greatest Ponzi scheme that the world has ever had, based on my research of all of history and of course current knowledge of today's time. And I was unaware of the Ponzi scheme until, of course, around 2007, 2008. For I always wanted to know what dollars, like what they were backed by, how the whole system worked, but I never really did understand that. Of course, the new age of the internet makes it available for those who want to know the information. That's the key word, those who want to know it, to get it, because you're not going to watch it on your mainstream media TVs, and you have to actually physically want to type in on the internet search terms that are going to help teach you about the biggest fraud. Of course, as time moves on, people are going to run into people as 200, 500, 1,000, 1,500 days come across. Those people not in the know, or those people in denial of such, are going to hear now and again from people about the Ponzi scheme. I can talk about fiat like it's a normal term now, where I had no idea what that word even meant or what it was symbolized for, before, of course, learning such at the end of the previous decade. So I realized that the banking system is long-term doomed, like Blockbuster, like the Yellow Pages, like the newspapers, and all other companies that have newer times and changes in the world and within its industry affect them. And when you do not and are unable to adjust with the new times, well, that's an interesting situation. So therefore, I look at the banks, it's a game I don't want to be in. Of course, I've talked about owning 3 different things as far as diversification. That of fiat, because you need to buy things with it, and you probably you accumulate such within jobs and stuff like that. So obviously it's the measure of money. So it's like an obvious that you want to have some of it. And then you got precious metals, gold and silver, in your physical possession, stored in a safe spot, or spots, pluralizing it depending on the situation. Of course, be very strategic. I'm not a fan of burying it in the ground, although I technically could myself and be very safe on it, but I'm not a fan of doing that. And then cryptos. Now, interesting in strategic analysis within cryptos, when you look at the amount you want to allocate towards such. You can allocate low, medium, or high. Medium would be pretty much the same as you are with precious metals, having pretty much just the same amount of fiat. And you can have some pretty amazing gains given the fact that Bitcoin's volatility is so much larger. But to the point, we're playing in low, meaning having situations where maybe you risk around or less than 10% of your portfolio on such. You're at the spot where you could do something like that and maybe not even a year goes by. Definitely one kick-ass move on the market. And now that trumps your other two positions after you only put like 10% in. That's the type of effect the crypto market has. So it gives you the availability to quote-unquote speculate with lower risk allocation, realizing when you analyze risk versus reward, the amount of reward that is available, which is extremely high, makes it, okay, wow, I wouldn't mind having X amount of funds. And now I don't, X divided by whatever number, which is a big number here, X divided by Y, or Y divided by X, either way, that I don't need too much to get it, so that makes it available for me to allocate low amounts. And then you got high. I don't know if you've ever heard the name Tizen on cryptocurrency market, but him and leonfu.com, they have a video YouTube channel. They've been around for quite some time, and they pretty much went all in on the ordeal, and they have done significantly well, because you can go from mega life-changing amounts, but that is, of course, do you have the risk tolerance for it? That's what's important for yourself. Understand your risk tolerance. Understand game strategies for how you're going to play out any markets that may have this move, so that if it doesn't go there, and if it does go there, you are happy and able to play on the situation, so on and so forth. So when it comes down to it, I don't like to try to predict these very short-term moves, although if I was to bet short-term now, which move on this range it's going to break, I would like to think that there's a decent chance that, again, it's going to be another elevator ride higher. I'm going to add the parlay. Not only do I would think that it would probably have a move 150 points above or below support resistance. So 150 above this would be like 77, 75, even 7,800, a bit more. And a move to like 7,000 and like 50-ish or so, 60. I think the likelihood would be more higher, but I parlay it that it wouldn't stair step or move its way with some higher highs and higher lows. No, it would be doing what it obviously did from this run up, and well, pretty much all of the other previous ones in which it has. But when you look at the velocity of the previous moves, the size back in July the 7th, the size of this move compared to the size of this one. The size of this one here was pretty good, but it also got topped on this move as well. And that's why I kind of wonder, don't be surprised, and I'm not going to be surprised, if you get a really major moment where this thing does a similar sort of thing, where on the hourly time frame you see one or two big green candles, but pretty much an elevator ride up looking pattern, and it doubles or triples this volatility. This was 10%. Maybe you do 30%. Who knows? You could see this go from 7,500 to 10,000 in 2 hours. Those types of possibilities to me would not overly all shock me, but it would definitely, well, maybe shock me, and maybe surprise me for a short period of time. But after the shock factor and surprise factor wears off, and it wouldn't take too long, I'd be like, yeah, that's like normal kind of stuff that happens within this Bitcoin market. Now, interestingly enough, these moves are generally going on with Bitcoin. A lot of the altcoins against the dollar may not look as well, and a lot of them against Bitcoin are showing very poor bearish signals, but they were doing so anyway. An example of such is Komodo, which on the hourly time frame has dropped all the way from 23 down to 21. This thing has been down for quite some time. It's got the type of pattern where, okay, it's going down and correcting like for weeks. Looks like 2 to 3 or so, 2.5 in this move in this sideways range in here, and then has had this red candle down. Of course, we see that on the hourly time frame, meeting up with this level of support, which basically tells me that, oh boy, now it's going to break below the support for another leg lower. We'll see if 20,000 or 19,000 is going to be the support next. Maybe it's going to just going to go down now. Maybe it will find support here, resist where we came from in support at about 23.3. But the volatility of these moves is so massive, and when they go, they go. Case in point, December 12th, from 18,000 to 88,000. And then case in point even last year with this move in here, going from 14,000 to 100 as well. So there's big moves when they're ready to go. But the whole point is that when you get the bear markets that come to an end, it wouldn't surprise me if a lot of these coins are going to have another January moment of, or December moment of last year, have another moment like the spring of last year. Maybe with a little bit of a greater amount of volatility, maybe about the same. But even if you got the same amount and you get like a 7x score, well, it would mean you're just continuing the range-bound market. We're at the bottom end of this range big time. And the upper end of this range hit several times, at least, well, 3 on this, is around the 80,000 Satoshi mark. That's 4x. And then when you talk about breaking a range, and you can talk about it on both sides. Okay, you talk about breaking this range here. Now you talk about a big move, breaking down below the 17,000 support marks. You're talking about 4,000 or 5,000, because that's like a 3x move. That's what happens when you break those big ranges. Same thing here. You got the range at 88. Oh, you break that. Now you're talking about maybe going to a million or a 12x gain from that point. That's how I react or look, or that's how I perceive and have noticed mathematically, of course, how these markets work. So I'd like to thank you for tuning in to this video and have yourself a great day. Bye-bye.